Imagine dreaming of something you've always wanted to have. You spent your time, money, and effort to acquire it. But just as it's on the tip of your fingers, it slips away because of a mistake that wasn't even yours in the first place. This is what happened to Paul Chan when he wanted to purchase his dream car, a Porsche Taycan. Good morning from Team Malaysia. I, Alma, alongside my teammates, David, Matthew, and Chihoy, are here today to help elevate Porsche strategies so that people like Paul can get hold of their dreams. Known as one of the biggest brands within the automotive industry, Porsche is known to specialize in manufacturing high-performance cars. With a net worth of over $24 billion and a recent all-record high of delivering more than 300,000 vehicles in 2021, Porsche stands to continue growing within the upcoming years. Through the case, we've also identified that one of Porsche's biggest unique selling points is their extremely luxurious brand that prides in being consumer-centric, as they've consistently claimed the top in having high customer satisfaction. Moving on, let's delve deeper into Porsche's current standing. Through further analysis, we've seen that Porsche's USP is derived from its supreme manufacturing quality. In a vehicle dependability study by JD Power, Porsche ranked second in US, indicating that customers experience less issues with their product after usage of several years in comparison to other brands. In 2021, Porsche maintained its lead among luxury brands in the China Appeal Study, scoring 761 points compared to the industry average of 743. From here, we can say two things. Firstly, Porsche produces vehicles that last longer without the need of extra servicing. And secondly, consumers enjoy the overall ownership and driving experience of a Porsche. Despite this, however, recent trends have shown that consumers are prioritizing the end-to-end customer experience. We see that the market is shifting online as they are 60% more likely to purchase their next car online. Consumers are also demanding the immediate, as majority of online shoppers from other industries expect real-time customer service and are likely to switch brands if they don't get a consistent experience across channels. Hence, there really isn't a reason to believe that expectations will be any lower among car buyers. Lastly, majority of consumers want a more intimate experience through tailored and personalized services from brands. Understanding Porsche's standing and what the current market wants, let's now delve into Paul's experience as Porsche's customer. This is Paul Chan, a Porsche Taycan enthusiast we introduced to everyone here at the start of our pitch. Paul read a lot about the Taycan and what best suited him. When he was ready to get his dream car, he was approached by David Wong. Paul, however, ended up going through a roller coaster of emotions and was dissatisfied with Porsche's customer service. He faced issues such as missing specifications in the final order, not being listened to when negotiating for compensation, and consistent failure in delivering his expectations and needs. Throughout this entire process, no senior management team reached out to him, even after he voiced out the issue to Porsche's customer relations service. So although Paul was satisfied with his Taycan, he ended up losing trust in the company. We recognize two key lessons from Paul's story. Firstly, disjointed dealership due to service failure and unsuccessful recovery. And secondly, the constant inability of customer service to meet customer needs. Moving on, we recognize that dealers play a central role in pricing and marketing as they bridge Porsche and their customers. This is especially crucial as they are the forefront of the brand. However, 36% of dealers mention that they see inter-brand competition as a threat to their business models. When dealers see others as competition, it shifts their focus into aggressively obtaining sales rather than ensuring a positive customer experience, posing a barrier to delivering a superior experience for Porsche's customers. In addition, dealers are also ill-equipped to meet the ever-changing needs of our customers. They lack online capabilities as majority of them still do not know how to set up online bookings, run an independent website, and conduct sales through third-party platforms. This is further heightened by the fact that dealers believe that new technologies such as autonomous driving and virtual reality would have a negative impact on their businesses. However, dealers do acknowledge their shortcomings, as 85% of them believe their sales model need to be changed. In addition, 15% of them are ready for the digital age, indicating an untapped opportunity to capitalize on. With their current model and capabilities, however, customer satisfaction for Porsche would continue to plummet, and Porsche risks obtaining less visibility on customers' choices. This is due to the fact that there is no superior customer journey. Because there are many different entities within their own systems involved, there are many inconsistencies in the customer journey, leading to a cumbersome purchase experience. In addition, the insufficient price coherence often confuses customers because it forces competition among dealers of the same brand, as they would offer special discounts to customers, creating price wars in hopes of beating other dealers. Lastly, dealers only have few to no direct touchpoints with customers, resulting in limited abilities to collect customer information. The lack of customer data thus makes it difficult to identify the pains and gains of the business, which are necessary for growth and improvement.
Thus, moving forward, Porsche's strategy must address two key questions. First, how to better support dealers in standardized processes, and second, how to boost customer satisfaction while having visibility over the entire process. Our strategy is twofold: launching an immediate response to resolve negative customer experience, and second, implementing a seamless purchasing journey online. First, we propose launching Porsche Pro, an immediate response plan aimed at resolving negative customer complaints and train Porsche sales personnel. Second, we recommend launching Porsche In, a web-based application that provides real-time updates on customers' requests and manufacturing progress. Collectively, this improves customer service and enhances visibility of dealers. Operationally, this renders the process streamlined, avoiding miscommunications while enhancing accountability. Turning first to Porsche Pro, our immediate defense to negative customer experience. Our research has shown that in-store customer experience is the highest factor affecting luxury purchases. Therefore, superior customer service in-store is a must-win battle for Porsche. In fact, mishaps like Paul offer a unique opportunity for Porsche to rewrite the consumer narrative. With the right response plan in place, Porsche can convert these customers into loyal brand ambassadors. Introducing Porsche Pro, our two-pronged response plan that seeks to address customer complaints. On the first limb, Porsche should try to rebuild trust with consumers and win them back. To do so, Porsche first must acknowledge and apologize to these customers at the first available opportunity. After realizing such problems, upon follow-up customer service check-ins, Porsche should proactively respond. The need for speed is instrumental, as seen as the case of United Airlines' late apology in dragging passengers led to its share price fall by 6% just in a single day. Second, Porsche should act quickly in allocating a key relations manager to oversee the problems. When this sort of disputes arise, customers want to feel important and that their problem is being heard and taken seriously. As stated in the case, Paul have often lamented the absence of senior management intervention as a sign of disrespect. Porsche can take a leaf out of Belco's deal that established an independent investor coalition committee to investigate the price quality issue. Third, Porsche must affirm its commitment to all customers by offering fair compensation. Rebates and service vouchers are a start, but if such practices are widespread, Porsche should issue an apology to customers, as customer centricity goes to the very heart of what Porsches do. When two black men were dragged out of Starbucks' quick move in shutting down 8,000 stores worldwide for a bias training actually did a very good job in boosting its branding. Turning to the second limb, Porsche ought to train existing sales personnel utilizing a holistic, human-centric, which consists of three parts: the head, the heart, and the hand. On the head, sales personnel must be taught what to do. Porsche must secure commitment of car dealers and establish a case for change. Second, on heart, Porsche must educate sales personnel and dealers on the importance of serving customers right. This creates an empowering culture that encourages sales personnel to speak up and escalate issues when they arise. Third, on hands. Porsche must equip personnel and dealers with the requisite tools for change. This institutes an agile way of working and removes impediments. By engaging the 3H, Porsche is able to enjoy a 3 times increase in terms of results when it comes to mobilizing teams and driving organizational change. This short-term strategy enables Porsche to gain quick wins, rebuild trust with consumers, and position itself as a leading luxury automobile.
Now that we know how we'll be addressing negative situations and upskilling Porsche's workforce in the short term, a key question our team asks is, could we actually leverage on technology, which is aligned with Porsche's 2030 strategy, to deliver on our customer-centric promise in the long run? And to do this, we propose Porsche In, which is the combination of Porsche and One. And now this is a simple portal that can be web-based or an extension of the My Porsche smartphone app. And through Porsche In, we aim to connect Porsche customers and dealers as one for a seamless experience. Now, a seamless purchase experience in the automotive industry has huge benefits, and according to Cognizant, more than half of customers would have repeat car purchases. 72% would visit dealerships more often, and crucially, there may be an up to 25% increase in potential sales conversions. Now, every stakeholder in the car purchasing experience has different objectives. Customers value convenience and accuracy of orders and a good experience. Dealers, on the other hand, would like business to be easy to conduct and convenient for their customers, whereas Porsche as a manufacturer would want to ensure quality and a superior experience. Now, while all these objectives are actually interrelated, they're actually severely hindered by inconsistencies as pointed out in the case. For example, between customers and dealers, Paul had to deal with so many different ways of ordering, and the way his orders was handled was terribly inconsistent. There were emails, there were WhatsApp chats, there were phone calls. Moreover, the way dispute resolution was handled was also far from helpful as he wasn't listened to. And between dealers and Porsche, there's inconsistencies in communication. And for instance, Porsche's centralized customer service actually didn't know about Paul's problems until very much later. Now, to address these inconsistencies, Porsche In will have various features specifically for each stage of the purchasing experience. Firstly, in discovery, there'll be a virtual product presentation and digital customer profile for prospective car buyers. Secondly, in consideration, there'll be dynamic real-time projections and pricing to give a clearer pictures to car buyers. And lastly, in purchase, customers will be able to obtain real-time manufacturing updates for their bespoke vehicles. And crucially, throughout the purchasing journeys, there will be two key features. Firstly, there'll be consistent centralized Porsche customer satisfaction service for buyers. And secondly, there will be periodic customer satisfaction reminders and guidance for dealers. And this ensures both customers and dealers get optimum support from Porsche throughout the journey. Now, Porsche In's features will benefit all stakeholders at each stage of the purchasing experience. And we do this in a few ways. For customers, with virtual presentation and a profile, they can visualize their dream car and know exactly what they want. And with a live projection system, they know exactly what their car order is to ensure accuracy. And with real-time updates of their car's manufacturing status, there is reassurance for them. Dealers also greatly benefit. Not only will they be able to better understand their customers, consideration is a lot simpler as customers understand their order and how much it costs. And lastly, they will also get clearer knowledge to liaise with customers and provide better service. Lastly, for Porsche, the holistic discovery phase projects a premium experience that extends beyond just the physical showroom. And this also builds brand goodwill amongst customers. And with real-time projections, they'll be able to better plan for in-demand resources. And lastly, by providing real-time manufacturing updates, Porsche itself can maintain order accuracy and avoid the very same mistakes that Paul suffered. Now, Porsche has a fairly simple stakeholder engagement, and in fact, this resembles an agency model which could be an interesting future proposition for automotive manufacturers. For customers, all they have to do is use the Porsche In portal and they can get accurate updates and a great experience. For dealers, they'll have to have closer engagement with Porsche, which will give them the knowledge, accuracy, and convenience to better provide for customer satisfaction. And for Porsche, we will have to be closely engaged with our dealers and provide additional education. But at the same time, we benefit from enhanced customer satisfaction and more brand goodwill through accuracy and consistent sales experience. Now, to summarize, Porsche In will shine the future path of customer satisfaction in a few ways. Firstly, by ensuring order accuracy and minimizing mistakes. Secondly, by providing data insights to both dealers and Porsche to make better decisions. Thirdly, ensuring customer service consistency from both Porsche and our dealers. And lastly, ensuring a superior end-to-end purchasing experience. Combined, we will fulfill Porsche's customer-centric promise. And now, we foresee being able to roll out initiatives within a year. For Porsche Pro, we'll set up a task force to quickly investigate and identify issues. We'll develop training modules and look to pilot it in selected markets with the aim of beginning process improvements and scaling within 6 months. And for Porsche In, we'll focus on developing capabilities and integrating it with our existing app or ecosystem, and we can then pilot it and scale it across large markets within a year.
There are 3 risks which may adversely affect our timeline and 3 proposed strategies for harm minimization. Firstly, changes in market demands on consumers' needs and wants is a tide that is constantly turning, with the biggest shift from engineering capabilities to the customer experience. Our mitigation strategy is to provide a touch point for consistent checks and revisions on project developments to change with the tide. Next, the inability for dealerships to uphold standards in Porsche Pro will be resolved through continuous communications to ensure high adoption rates of SOPs while utilizing a monitoring and feedback system to improve on existing SOPs. We always have our customers at the forefront of our decision-making calculus. As such, our offering differentiates itself through beta testing and user acceptance testing to offer a platform that prioritizes a frictionless end-to-end consumer experience. Ladies and gentlemen, my financial overview will be segmented into a three-part top-down view consisting of Porsche's forecasted revenues, our project evaluation, and thirdly, the breakdown of revenues and expenditures in our base year. Porsche reported a 5% decline in sales in Q1 of 2022, attributed to the firm's business lifecycle, fierce competition from comparable luxury car companies such as BMW, Ferrari, and Lamborghini, logistical issues due to the pandemic, customer dissatisfaction, and dealership disjointment. In status quo, Porsche is stalling at a negative 4% CAGR, with an underperforming sports car segment in 2021. Our team's analysis of the weighted average revenues of Porsche's sports car segment in 2021 illustrates just how Porsche is falling behind in this race relative to the industry average of 4.77 billion euros. However, with Porsche In and Porsche Pro, we aim to close the gap and win the race at plus 5.31% CAGR by 2026. From an incremental free cash flows perspective, our Porsche Pro and Porsche In initiatives will generate on average 130 million euros in yearly incremental free cash flows up to 2026. We forecast an initial lag in adoption for Porsche Pro by dealers and Porsche In for customers, but quickly, free cash flows will accelerate at a CAGR of 5% as adoption grows. From a project perspective, Porsche In and Porsche Pro are expected to create a net present value of 437 million euros, discounted at a hurdle rate of 5.04%, consequently bringing a 36.81% internal rate of return. Our initiatives create value for the firm and curate a seamless bespoke customer journey, and hence is an invaluable investment to undertake. Decomposing our revenue and expenditure structure further, in our base year, we expect a net profit of 111 million euros. The revenue drivers we forecast are new sales, which account for a 4% conversion of the weighted average revenue of Porsche and 2% conversion for existing customers to bring our total revenues in year zero to 413 million euros. On the expenditure front, an initial investment outlay consisting of 70% CapEx and 30% OpEx is forecasted, with main line items consisting of IT infrastructure, maintenance, project team expertise, testing and training, to net expenditures of 302 million euros. To quantify impact, Porsche In and Porsche Pro will bring an additional 55,861 new satisfied customers on top of their existing consumer base, with an increased 765 million euros in incremental revenues to bring satisfaction to both customers, dealers, and shareholders.
Ladies and gentlemen, our strategy is focused on two main pillars: immediate response through Porsche Pro and creating a seamless purchasing journey with Porsche In. With Porsche Pro, we focus on adapting quickly to see our issues while utilizing a human-centered approach to retrain our staff to put our customers at the forefront of our operations. With Porsche In, we focus on connecting Porsche, dealers, and our customers through one platform to drive for better order accuracy, data insights, customer satisfaction, and an overall superior experience. These strategies do not only enhance Porsche's customer experience, but also drive sales and revenue, aligning with Porsche's dream to continue pioneering the industry while prioritizing a customer-centric model. Hence, we believe that with Porsche Pro and Porsche In, we can, in fact, make the dreams of people like Paul come true. Thank you.
Thank you, team from University Malaya. It's now time for our Q&A. Judges, please feel free to ask the first question.
Can I ask the first question? Can we dig deeper into the competition, right? And I just want to understand then the comment in the first couple of slides talking about the dealers, the intra-dealer competition, and then So what is the problem with the dealers in China?
Yep, I can take that question. So the problem here is that because dealers are driven by sales and commission, there exists inter-brand competition whereby they are more driven by obtaining sales rather than actually prioritizing customer experience or customer satisfaction. So because of this is what actually motivates them even more rather than actually prioritizing customers and putting them at the forefront. So because of this, of course, we believe that this sort of creates a gap within the issue, and hence why there is a lack in contributing to a more superior customer experience for Porsche's customers in this case.
Sorry, so how does the 3H strategy would address this problem then?
Yeah, perhaps I can take that question. So a key reason why why these dealers see each other as a competition is because they're not really aligned on the big goal of the company, and there's very little inter-dealer education. Like, okay, because actually there's more room for a cooperation. You can pass contact to another person if required, etc. And through this 3H approach, we really want to re-educate our dealers as well as our sales personnel on the importance of collaborating with each other by telling them what is the bigger picture at here. Yeah.
For me, if I may ask, so I saw a slide where it said the IRR is 36%. That's large. Wow. If I can get like a clearer, or can I re-ask the narrative of how you got to the 36%?
Sure, I would like to take that question. Thank you very much. It's a very good and very interesting question. So essentially, the IRR is taking the free cash flows that we project. Perhaps you can move to the next slide, please. The next one, thank you. Yeah, cool. So essentially what will happen is that we forecast the free cash flows to grow at a CAGR of 5.71%. And that steady state growth will continue from 2023 up to 2026. And as such, when we discount it back at our hurdle rate, we can then compute what will be the internal return rate for this project, for both initiatives, Porsche In and Porsche Pro. And basically the justification behind why we have a high internal rate of return is because essentially the CapEx and OpEx expenditure is essentially only 302 million, which is essentially in the grand scheme of things, when we consider the total net revenues of Porsche as a company as a whole, it is essentially a very small undertaking. And in sense, the returns that we get from this is actually quite large in the scale of how much we're actually investing in. This is attributed to the fact that, for example, Porsche In is actually a form of integration with the My Porsche app, whereas essentially there's an existing consumer base that does subscribe into the existing application, where on your phone, you can just hop into the app or access the portal on the internet and see how much fuel your car has left, how much mileage it has left. We intend to build onto this existing infrastructure. And hence, that's why the CapEx and OpEx initial investment outlay for this is quite low, and hence why the IRR is large.
So just a follow-up question. So the IRR, the base that we're comparing it to, is it 2022 without the system, or is it 2022 to 2026? Or is it just one period in time, or is it are you comparing it to a scenario without the system, without Porsche In, Porsche Pro?
Okay, actually the duration of which we are comparing the internal rate of return to is going to be starting from 2022 until 2026. We are actually accounting for the fact that there are actually CapEx and OpEx expenditures. So when we include this Porsche In and Porsche Pro integration within this existing systems, and we have this initial investment outlay, we include this expense within the IRR calculations. However, this figure is not as large as it potentially could be if we were starting from scratch, because building an application or building a new platform is very, very costly in and of itself, as well as training dealers and outsourcing marketing experts to help coach dealers on how to better upsell. These things are expensive. However, Porsche is already has its roots within the My Porsche app, as well as its strong network of sales and marketing and business team individuals, where they can just outsource these individuals to go to various dealerships all across the world where there are key win battles for them. And essentially, they are able to use existing resources and have basically a small capex and opex of 302 million euros, you essentially get that large net internal rate of return, and hence the bottom line is it is essentially accounted for within the IRR calculation, where we do take the time period of 2023 to 2026 inclusive of this initial investment outlay of 302 million euros.
A question from me. I think we can stick on this slide. So we are to invest like around 300 million euro. So is it for one market or for multiple markets, or like for how many markets?
Thank you, Mr. Alexander. That is a very good question. Essentially, this is going to be for the global market. However, we have actually managed to identify where are the key global markets which are necessary for us to essentially deploy this capital, right? And so for the Porsche In, because it is going to be on an app and platform basis, essentially it's going to be able to be accessible by Porsche users all around the globe. Anyone that has a smartphone and has a Porsche car and has this app installed on their phone or wishes to purchase a Porsche through the Porsche website has access to this. And hence that is for Porsche In. It's going to be a global market. For Porsche Pro, we have identified the key markets where it's going to be China, Hong Kong, as well as Malaysia. These are the first three preliminary markets where we feel it is essential for us to deploy capital to address the pressing customer service needs. And so we are initially going to deploy them here. And once the success has been proven and we have a track record of it, we plan to essentially go global and to essentially further expand our outreach of deployment for professional capital labor that are able to train dealers to basically create a bespoke experience for their customers end to end.
Thank you. So a follow-up one is you have like a major revamp. You have a major revamp in terms of both the dealer relationship and the online, like a new customer journey. So you intended to roll it out globally, and the development time is within 12 months. So is it? Have you considered whether it is like a realistic or like is it too aggressive? Like we're looking on screen is like everything will be done in 1 year, and in 1 year we are spending like 300 million euro and rolling out to all of the market, in particular for the Porsche.
Yeah, maybe I can take the question. So I think initially when we made the idea, obviously we wanted to do it with speed because if we look at customer relations, if you leave it any longer, it will always sour and it will cost a lot more than it would actually take to, rebuild that trust. So obviously at the same time, we noted that there may be difficulties in doing it within 12 months. And also obviously the initial outlay seems like a lot. So which is why when we actually looked at our timeline, especially for Porsche In, because as you said, it's a development of a whole new portal. So the key thing for us was that obviously in terms of developing capabilities integration, we feel that it's an already existing company. The company already has the capability to do it. It's just about the integration. But then the tricky part will always just be the implementation with our dealers as well as customers. So when we looked at piloting selected dealers, at the end of that particular phase, we have like a yellow dot there, which for us is actually supposed to signal a review point. So obviously, depending on the review, it could be longer, it could be a success, and it could take shorter. So obviously, it could take more than 12 months, but preliminary from our projection, we forecasted that we would be able to do it within 12 months.
Okay, thank you.
Can we go back to the chart with the cash flows? Okay, so for the first question, so 36. Okay, let's do some arithmetic. So you subtracted 302, gain 103, gain 111, and by 2025, you're gonna at least, your cash flows will be enough from what you originally spent in 2022. So the 268 million euros here, that's what the 36.81% represents generally, right? So 36.81%, that 36.81% all came in between the end of 2025 to 2026. So what can I ask, what's the strongest driver of this revenue? Is it the additional people, your additional customers, or the cost savings, or? And what's the driver?
Thank you, Mr. Dakane. So essentially, we believe that the strongest driver is going to be onboarding additional customers. We believe that this is going to be the main revenue front that will carry us through our payback period, which is forecasted in the next, in year 3, essentially. We believe that through Porsche In and Porsche Pro, when we are essentially able to reverse the effect of having a poor customer experience, if we are able to stop it before it spreads, because word of mouth travel quickly, especially within a community of Porsche enthusiasts. So we believe that when we are able to essentially change the brand image of Porsche, initially what's going to happen is that people that choose to go to a Porsche dealership or use the Porsche In app are able to go and have this experience end to end and be satisfied. We then believe that there is going to be essentially a spillover effect, whereas people are going to start spreading the word of mouth and saying that Porsche is great, like it's an amazing experience, just like how it was, but even better, right? And as such, once what happens is a networking effect, whereas more and more people are going to onboard, it's going to roll over. So that's actually essentially new customer acquisition is going to be our primary revenue driver. However, we also have to bear in mind the fact that there is a potential for risk. We have to account for it, right? Because Porsche's unlevered beta, is actually going to be 1.31, which is essentially quite a large beta. And that's why essentially the hurdle rate for this is 5%, which is quite large. So when we have to take this into the big picture, this project has a level of risk to it. However, we also understand that there's a level of risk, there's a level of aggressiveness in terms of essentially rolling out this initiative, but we believe that the gains that we will get from new customer acquisitions heavily outweigh this cost, and that's why we feel that it's a worthwhile project for us to invest in. And hence, to answer your question, the bottom line is the final biggest revenue driver for Porsche is going to be the networking or spillover effect of new customer acquisition and being able to experience such a unique experience. And it's the exact same as when you buy a new iPhone. You can either do it through the iPhone app or you can go see a retailer. And the end-to-end experience is luxurious. You get to see when your iPhone is going to be delivered every step of the way or when it's ready for collection. We want to essentially mirror that. And we believe that that's going to onboard a lot of new customers and will be the main driver for the impact.
So in a scenario without the system, without Porsche Pro or without the system, are you assuming that there will be no growth there will be growth in customers without the system? Is it yes or no, just basically?
Okay, to answer your question, we have to say that no, we believe that forecasts that Porsche is going to be stalling at basically a negative CAGR. Even in Q1 of 2022, it's already essentially a negative 5% drop in sales, right? And that's why we feel that this negative CAGR is going to continue unless we intervene with our initiatives.
Have you considered any other options? And in addition to a recommendation, what other options have you guys kind of like thought about when you think of the recommendation?
One recommendation that we kind of debated amongst ourselves was converting the dealership model into a agency model, which kind of revamped the entire Porsche's current model. In fact, the agency model is adopted by its competitors such as I think Mercedes, BMW, and Tesla, if I'm not mistaken. The reason why we chose not to go with that, because we felt that the shift was a little bit radical in terms of short term. And if we were to convert that model immediately, what's going to happen is that a lot of the dealers on the ground are going to feel very isolated. And we felt that it wasn't a short-term strategy that we could roll out so quickly. Yeah.
And maybe one final quick question says, like between the two solutions that the two projects that you proposed, do you have a feel on like in terms of the investment? You get like an overall investment of like around 300 million euros, but how do we split between the two in terms of the revenue and the cost, and also the risk of executions?
Sure, perhaps you could go to the two pie charts. Okay, we've actually splitted it up into 40-60 mix. We believe that essentially Porsche In is going to capture 60% of new sales, and Porsche Pro is going to build upon the existing community for 40%. People that go to their dealers, people that go for maintenance, these are people that are going to essentially love the experience, right? And so that's our 60-40 mix. Yeah.
Okay, thank you. Thank you for the Q&A. Thank you, judges. Thank you, team. Judges, please stay in the room while we move everyone else to the waiting room.